Welcome to Profit Talks. I'm Profit. Today is Saturday, May 30th, 2026. And we have quite a packed agenda today because obviously we'll discuss everything that happened with Iran during the week. We will also discuss Cuba and what's happening there. And we will also take a look at some other markets, including AI markets, mergers and acquisitions, and aliens. Everything, of course, on Polymarket, where we have the best insight into all kinds of global events. So we've got a packed agenda today. So let's take a look at the markets and let's see what's what. Starting with the basics, so the US ex-Iran permanent peace deal. I try to have always the 1 week view on those markets when I do those videos. So every time you see a chart here, it's a 1 week chart. And here, as you can see, we had quite a volatility during the last week because last Sunday when I made the previous video, we were pretty much at the highs of the recent deal euphoria. So what happened, if you don't know, is that during the weekend, we had rumors that there is an imminent deal, that the text is basically finished and it's ours till it gets signed. But ever since then, what we got was pretty much an extension of this timeline. So all the time throughout the week, we had several times during which we had renewed rumors that the deal is imminent. But as you can see, here we are on Saturday with only 5% chance for a deal till the end of the month. So just let's walk it through and let's see how the traders reacted, why, and what's pretty much the lesson for the future. So as you can see here, at the end of last week, the chances for a deal by the end of the month rose to pretty much 70% at some point. And then they pretty much fell all the way down to 28% on pretty much the very same day. This is what happened when we had the rumors of an imminent deal, but then hours passed and nothing happened. So initially, traders just saw the headline that the deal is imminent, it's ours till it gets signed. So pretty much everyone just piled up and tried to catch the ultimate deal rally. When it turned out that it might not in fact be true, we had a pretty steep reversal, almost all the way back to the levels seen before the rumor. And then throughout the week we had other rumors, but each one of them produced a lower high and subsequently a lower low. So the next rumor only gave us 53% chances of a deal. Then when the euphoria faded, we went as low as 21%. So as you can see, it was a lower high and a lower low. Then as the week started, we had another package of rumors. The chances went up only to 40%. They pretty much were falling down all throughout the week, reaching as low as 8% here. And then on Friday, we also got a rumor that Trump is going into the Situation Room to discuss with his advisors the final deal and whether to approve it or not. So once again, we had a pump, but as you can see, then we went only from 7% to 16% chances for a deal by the end of the month. And the meeting lasted for a few hours. After the meeting, we learned that the deal is not in fact signed. Also, Iranian media started to spread the news that there is nothing agreed, that there is no final text, and there is pretty much nothing, that the whole rumor mill is based on vaporwave. So pretty soon after the pump, the chances went even lower, and we ended up with 5% that we have now. So this is like a classic pattern that we can see on prediction markets ever since the initial ceasefire in April. So there is like a silence period in which we have no news about a deal. There's like obviously Obviously, everyone understands that the negotiations are taking place all the time, but we have no rumors, so the assumption is that there is no progress. When we reach a certain low, then a rumor appears, and each time it's outrageous enough to actually produce a massive rally all the way above 50% for sure. Then the rumor dies out, and it's ridden for the next few days. And each time the rumor gets repeated or reiterated, or once again we are promised an imminent deal, but based on the same deal narrative that appeared initially, we reach highs, but they are lower than before, and then subsequently we go to the lower lows, and we have this like a swing type of activity on the market, where it pretty much shows that the Trump administration can produce a narrative of a deal and then reiterate it like 3 to 5 times, with each subsequent reiteration having smaller effect on the public opinion and the traders, not only prediction market traders, but also like oil traders, stock market traders. So there's like a finite time they can reiterate a certain narrative before it dies down on its own. And if you listen to my videos regularly, you probably know that this exact pattern happened at least 3 to 4 times in the last 2 months. And pretty much what I can understand now is that even after those few times that we already had this whole cycle, and it's get repeated and repeated and repeated, every time the Trump administration is cunning enough to actually develop a narrative that is so good, so outrageous, so believable, that the traders just pile up anyway because they're scared that they will miss the main rally of the market towards the peace deal. A few weeks ago, I had an assumption that at some point those narratives will stop being believable, and the highs that we will see from the next narrative and its reiteration will be lower and lower, up to a point that they will basically make no effect. But obviously, this week proved me false. We're definitely not at that stage yet. I think there are at least a few other clever ways to create a narrative that will also capture the market, capture its attention, and force a move upwards when it comes to deal chances, force a move downwards when it comes to oil prices, and force the move upwards again when it comes to stock prices. But ultimately, I think it's important to understand that to actually achieve a deal, there are pretty difficult issues to be resolved, and more likely than not, they will require some wider cooperation. So it will not only be the US and Iran just talking and exchanging information, it will also include Israel, probably Saudi Arabia, Arab Emirates, Qatar, Oman, maybe even Iraq, Turkey. So it'll be a wider effort. And to coordinate such an action, I think we will need a proper meeting. So to give you a parallel, during the Gaza war, there were also several times during which there was a deal narrative. It was supposedly very close, but each time the narrative died out, as it does now. But the last time that we actually got a deal, Netanyahu came to the White House. He emerged with Trump announcing their 20-point plan to end the war, and then this plan was being slowly implemented. There were meetings in the Middle East, in Egypt. Steve Witkoff and Jared Kushner went there to finalize the deal. So we had a series of developments on the ground that matched the narrative. And now I would say we have no real developments on the ground that match the imminent deal narrative. So we have no US delegation coming to the Middle East. We have no Middle Eastern delegation, be it Israeli, Turkey, Saudi Arabia, whatever, coming to the White House to actually negotiate something, which kind of suggests that we are still in the middle phase of the negotiation. So some points are probably agreed on, others are close, and there are still a few clauses that have no alignment at all and still need time to reach a compromise. So a bit of alpha here from me is that if you're trading on prediction markets and you want to catch a deal rally, a real deal rally, you should probably wait and see if there are real developments on the ground that are matching the narrative. Obviously, nothing here is financial advice. I'm just a guy trying to understand the world and the market. So that's it. When it comes to some alpha, that's also my approach here. So we will see how that plays out. But for now, what I pretty much notice on the market is that there is a repetitive pattern with each deal narrative that you can observe, and you can probably try to see in real time the next time we have a deal narrative. So to put some wider context on the US and Iran situation, there is also another market, because the first one was on a permanent peace, which is pretty difficult to achieve, because any agreement that will actually be published will need to include a clause that there is a permanent end to hostilities, at least between the US and Iran. So obviously that's a difficult thing to achieve. But there is also a simpler market, so a market with softer rules, and by softer I mean there are less requirements to satisfy the yes side. And this is the US announces a new Iran agreement or ceasefire extension. And here, any agreement is good enough, basically, that says that any agreement between US and Iran, but obviously the one that everyone's waiting on is a ceasefire extension, because the current ceasefire hasn't been formally extended. So what this deal narrative pretty much did was, I would say, permanently stabilize the ceasefire extension chances between like 45 and 75%. So even as the permanent peace deal market went down with each new rumor, because there were lower highs and lower lows, this market, this is by June 7th, traded in range. So even during the times that there was no progress being reported, traders still understood that this deal has pretty much the same chances. So what's the difference here is that it's a lot easier to actually have on paper a ceasefire extension, because that's essentially what's happening right now. So it's in theory a very easy deal to achieve, because it will just formalize the current status quo. But at the same time, this market also reacts to what is happening in the media. So each time we have a rumor, there is a spike up to around like high 70s. Each time nothing happens, there is a low in the low 40s. And this just goes back and forth, back and forth. But what's also visible from this market versus the permanent peace market is that traders really do see a chance of achieving that by the end of June, because we have 72% chance of such an extension by the end of June. And what it tells us is that while a permanent deal, so a permanent peace or some kind of a permanent agreement between the US and Iran is pretty difficult to achieve, even with the rumors that we have, Trump can achieve something easier in between. So I understand it as such that there is a high chance we will get a very watered down agreement that will essentially formalize the current status quo at some point, probably when all the fabricated deal narratives stop making such an effect on the market. But there is still a lot of issues to be discussed before we can have the final agreement. I think this is also aligned with another market that I like to look at, which is Iran closing it at airspace. So this market, as I told you before, is essentially a proxy market for hostilities restarting, because Iran will close its airspace only when there's a high risk of missiles and drone barrage on their territory. And on this market, ever since last week, but last week was mostly a mistake because there is an update to the NOTAM that Iran issued a month ago. So outside of this little market mistake here, or trader's mistake, the market's is pretty much trending lower ever since it was created, as you can see. And this basically means, and this is not only the end of May market, also any look at end of June market, we have the same pattern here. So it's been going downhill pretty much ever since it was created. So what it also tells us in connection with the previous two markets is that whether we get a deal or not, or a simple deal or a complicated deal, the deal to end of deals, whatever we get or whatever we don't get, it's still pretty unlikely that we will see a return to hostilities. In totality, those free markets basically tell us that there is still a lot of negotiations to happen. There's still a lot of issues to be resolved. But also at the same time, both sides are not really willing to go back and fight it out, as there is a rather high chance we'll see a ceasefire extension and a very low chance we'll see a barrage of missiles and drones being sent to Iran, on Iran. So in their totality, I think those free markets tell us a very compelling story that whatever's happening between the US and Iran right now will take quite some time to resolve. This is not a conclusion you can easily reach when you just read the media. I don't think there are a lot of media outlets that actually sell this narrative. I think it's a lot more clickable to sell like a deal versus war dichotomy, polarization all the time, because it's clickable. You probably wouldn't click on an article link that says it's still a few weeks or even a few months away from a proper deal, because that's not interesting. But looking at the markets, that's the most probable reality at this point. And looking also at my research, I don't think the markets are wrong here. I think the assessment of the situation is correct at this moment, and there is still quite some time before we can get something real. And lastly, just to complete the whole analysis of Iran, I just like to complete the topics from A to Z, go through everything that's important. Obviously, the most important issue for everyone reading this, so not only the US or Iran, so people from the US or people from Iran, is the Strait of Hormuz issue, because this is the one thing that is impacting the whole world. And probably all of us would like to see it opened. And here I don't really have good news, because this market, so traffic normalization, really behaves very similarly to the deal market, because people connect those two issues. So traders think, and it's a good approach, that a deal between US and Iran should somehow open the Strait of Hormuz for commercial traffic. So as you can see, the market also went up to around 70% when the imminent deal was announced, and then each deal rumor created a lower high and then a lower low. It's exactly the same situation, and if we look at the wider timeline, we can see that we are pretty much, we are very near the lowest lows that we have on this market. So when the deal was not really expected, when escalation was expected, and everyone was worried that we are getting actually back to a kinetic war. So what does this market tell us? I think it tells us a few things. One is that when we have 34% chance for Strait of Hormuz traffic normalization, we have the same chances for a deal. So we can see that traders don't really think there is a discount at this point. This is probably because there is still a month out. But I would say that as soon as we move closer to the deadline, the Strait of Hormuz market will go lower than the deal market, because these two are connected. But what it also tells us is that it's not really that likely that we will see traffic, normal traffic, resuming through the strait anytime soon. When we also look at the July market, at this point there is 56% chance we will see traffic normalization. As you can see, this is a pretty new market. So it's been trading for 2 weeks now. The volume is a bit lower than what we have on a bit like 10 times lower than we have on the June market. And outside of the spike created by the deal rumor last weekend, the chances for traffic normalization are going down all the time. So when I do this video a week from now, there is a pretty fair chance we will go below 50% here, which would mean that for the next 2 months, we shouldn't really expect traffic normalization. So there are plenty of consequences of that, mostly with oil and energy markets, but also all the other downstream markets from that. Just something to keep in mind. I won't delve into the details of global supply chains here, but I think it's very good to look at the long-term markets on the global events, because they can tell you a very true forecast of what is going to happen. And some of these forecasts may scare you. Some of these forecasts are not really well reported on, and ultimately they are important because that's our lives and that's our future. So that's it when it comes to Iran. I know probably some of you may be bored by the topic, but I do think this is the most consequential global event of the last few years. I would say this is more important than Gaza war and Ukraine war, and probably than tariffs. So we just need to keep attention on it, as it impacts all of us, and its resolution will also impact all of us. So that's it when it comes to Iran. Let's just move to Cuba now. As you can see, there's been a sudden spike in chances of a diplomatic meeting between US and Cuba. And here I don't think this is a really good market, like for tracking the information, because it's the third market on US and Cuba diplomatic meeting this month, because we had one meeting between Ratcliffe, so the director of the CIA, and some representatives of the regime. Then we have some US diplomat also meeting with some representatives of the Cuban regime, and now we supposedly had a general that met with some other representative of the Cuban regime near Guantanamo. Is it a diplomatic meeting? Probably. I can see that some traders here have some doubts, because we went from 98% chances there was a meeting to 88, so there's definitely some doubts. But ultimately what it says to us is that the situation in Cuba is developing, and the pace of developments is accelerating, because before May we didn't really have any kind of meetings. We only had the US blockade on the island, and we had like weekly reports that the situation on the island is becoming more and more dire. Now these reports are also happening, but we also have the diplomatic meeting reports. We have some rumors of imminent airstrikes. We also had the indictment of Raul Castro, which was probably supposed just to stir a pot a bit. So we can clearly see, not from the chart here per se, or the trading activity, but from the cadence of those markets reappearing, that the situation is developing really fast. So this is interesting from one perspective, because if the US is really looking to do something in Cuba, they don't have a lot of time, because I would think that they would like to wrap things up before the World Cup in the US. I don't really think they want to have a war like 100 miles from Florida during the World Cup. So if they want to do anything, the time is really short, because we have 2 weeks till the World Cup starts, and then the World Cup takes a month or so. So the next good window of opportunity for a military operation is in mid-July. I don't really have a serious conclusion here. We can probably see if there are any other markets. So we have military action, which is at 49%, so still a coin flip. invasion 23%, economic deal 15% by the end of June. That's interesting because that's basically telling me that there will be no deal by the time we have a World Cup. Probably no strikes as well because they're at 50% by the end of the year. So probably the most likely scenario is a series of meetings and series of narrative escalations throughout the next month and a half. And then when the World Cup is finished, we can probably have some proper development. We also need to keep in mind that the US military and the US political apparatus in general is very busy with the Iran situation. So it's probably difficult for them to really engage at different fronts because there is also the Ukraine front, there is also the situation in Venezuela, which also needs attention of the US military. So I would say that some time needs to pass before they can really engage militarily in Cuba. And since there are no serious diplomatic meetings, so at the high level, so Trump or Rubio meeting with some senior representatives from Cuba, that basically means for me that there's still quite some time before we really start to see the situation and the developments ramping up. All right, and that's it when it comes to like geopolitics or foreign affairs in general. But then we also have three interesting markets. I think they're interesting because they show that things that have 15% chance of happening also do happen around 15% of the time. And they also show that if you really want to trade prediction markets, if you really want to trade Polymarket, there is still plenty of opportunities lying around. And if you are able to identify some trends ahead, there's probably there is still place to enter. So the first market is aliens.gov confirmed as immigration website. And if you don't know what this market is really about, is that somewhere in, I think back in April, the US government registered the website aliens.gov. People generally thought that this website would be connected with the UFO files or the UAP files that the site would be used to actually post the classified documents that tell about non-human intelligence, because this was pretty much done around the time where the discourse on the whole UAP situation really got a lot of fuel in the media. So as you can see, initially the market had around 12% chance that aliens.gov will not in fact consider aliens, but will be dealing with immigration. Then those chances went even lower. I think at 7.5% was the lowest point, or 6.5%, even 6%. And then as the situation developed and we didn't really have a lot of news on the UAP situation, we got the first drop of the files. And the first drop of the files didn't really happen on this website. This website was still dormant. And people started to connect the dots, and since in English an illegal alien is an illegal immigrant, the chances for the website to actually be about immigration increased. And so they went from 6% to 58% and then normalized around 38%. So as you can see, even after the initial doubt, traders still mostly thought aliens.gov will in fact deal with aliens. But then suddenly this week, the site was published online, and after a teaser that generally suggested that we will in fact deal with the aliens, like the non-human intelligence, it started showing files around illegal immigration. So whoever thought back in March or even back in beginning of May that the US government won't really release any files on non-human intelligence, they were really right. And as you can see, the traders on prediction markets don't always know everything, or saying it otherwise, things that have 6% chance of happening still do happen 6% of the time. And we all need to remember that when we are looking at the forecast. So even if something has 10% chance of happening, it can happen. It never says that it cannot happen. It just says there is 10% chance of it happening. So you need to understand that. So it's just a forecast. It's just a probabilistic forecast. It's nothing less, but it's also nothing more. Okay, moving next, I think this is one category of markets which I really like, and one we had interesting developments in, which is merger and acquisition markets. I think those markets are especially interesting because they're one of the closest things to actual traditional financial markets that we have on Polymarket. But at the same time, the whole merger and acquisition industry is very misunderstood by the traders. So often those markets are really soft. And as you can see here, this is the example of Pizza Hut. And Pizza Hut is rumored to be sold. The rumors on Pizza Hut being offered on the market started to happen somewhere around early December. So Pizza Hut is owner, so Yum Brands is looking to sell it. We had a lot of news around starting the process, etc. So the chances on the market were pretty volatile. We ended up at 69% chance Pizza Hut will be sold in 2027 at some point, only for the chances to fall down to 25% and just lay dormant pretty much till February. Then we had another news, another spike, and another spike down, and the chances were around like 40s and then went down once again to 20s, just because there was no news. And then today it turned out that one private equity fund is in exclusive talks to acquire Pizza Hut from Yum Brands, and once again the chances on the market reach 57%. And what I wanted to show you here, and why I'm showing a market on Pizza Hut versus some markets on politics like I used to, is because there's also very interesting inefficiency on Polymarket, is that Polymarket still trades a lot on what we see on the news. It interprets what we see. So it gives a probabilistic forecast based on the totality of the information that is available in the space, so in the media. But as you can see, if there is no news at all, the market starts to think, so the collective of traders start to think that something that was supposed to happen is not happening because there is no attention to it. So if there is a silence between two reports, then you can usually expect the chances to go down. And when we look at politics, this is probably a good approach, because politics is in our lives on a daily basis. When something's happening, we hear developments on a daily basis, and when we stop hearing about something, it usually means that it failed, it's shelved, or it won't continue. But when we look at the M&A markets and the M&A industry, it's really a private process. So the leaks or the rumors or the official announcements only happen from time to time when it's strategically important to update, when it's important to see the market reaction, etc., etc. So they can happen like, they can be a 1 month break between the updates, even 2-3 months of break, because the process takes time and there's really no need to publicize it. And here, as you can see, there is a small inefficiency because of how the current attention economy works. So if you're experienced in mergers and acquisitions, that's probably a bit funny to you. If you have no experience in mergers and acquisitions, then you can probably understand that since it's a complex process, there is no updates, and when there is no updates, the market goes down, which offers an interesting inefficiency when we look at the broader picture. Because if there is a conversation about some company trying to get acquired, then we can probably expect the price that reflects the chances of the company being acquired to go down as there is no news. So if you probably a strategy in which you wait for a bit after big news hits the tape to actually trade on those M&A markets can probably be a bit profitable. I'm not sure about it. I didn't really check it, but it's an observation I made looking at the Pizza Hut market. I was actually trying to trade it last week Sadly, I didn't get filled. I was trying to go on yes, and just today we got the news. So I thought it's an interesting case study of how different markets than political markets work, and where there can be some inefficiencies. And to close things out, some non-political, non-financial market, we are now focused on AI. And generally the pace of AI developments is staggering this year. We got plenty of new models, plenty of new capabilities. But I think the one model that really piqued everyone's attention was Cloud Mythos. And it piqued everyone's attention because it was not released to everyone. So the rumor was that the model is so good that Anthropic, so the creator of Cloud, is afraid to release it to general public. They created some kind of a project in which top big tech companies actually got access to it to try and test the vulnerabilities in their systems. But now, after releasing Cloud 4.8, Anthropic said that it's also looking to release Mythos in a few weeks. As you see, traders didn't really expect that to happen, at least by the end of June. So the announcement made some waves on the markets. We have now 42% chance we will see the model by the end of June, but we have 70% chance we will see it by the end of July. So we can pretty much expect it to see in July. But what's interesting here for me is that initially the reports on the model being too good to be released made a lot of people afraid that that's how things will look going forward. So the AI labs will develop better and better models, but they will get not only more expensive, but the access to it will be more restricted because of business security, national security, whatever. But ultimately, what we see is that due to the very pace of AI development and the competition that there is, because Anthropic competes with OpenAI, with XAI, they also compete with Google, so Gemini, but additionally also the Chinese companies, so DeepSeek, Kimi, and all the other models that are there. And thinking about it, like in hindsight, it was pretty clear that sooner or later they will have to release this model because other AI labs will just catch up to them. And if they didn't release the model, they would simply fall behind. So that's an interesting case study as well. I think it shows that you don't always have the whole truth in the media, and sometimes when you don't have enough information, you can reach wrong conclusions. So from my side, just congrats to the traders that went on yes here and understood that with the pace that we currently have, it's a given that sooner or later we'll see Cloud and Mythos released for the general public. All right, and that's all I wanted to go for today. I hope you enjoyed the episode. If you did, leave the like, click that subscribe button, and help spread the prediction market news approach on YouTube. And if you do like prediction markets in general and want to read more about how they operate and how to trade them and how to analyze them, you should go on my Substack on profitnotes.com, where I publish a couple times a week on different issues on prediction markets, mostly on geopolitics. Also, you should go on my X, where I comment on a daily basis all the global events and all the big dramas that happen on prediction markets. So thank you for watching, and see you next week for another round of Profit Talks.